This is Chuck Carnevale, and I'm the Chuck in the Market's Up Chuck. And today's video was called Time In, Not Timing the Market. And what I wanted to show here, I've got our fundamentals at a glance research tool showing the earnings of the S&P 500 over the last, since 1995, just 15 and 3/4 years. The black line is stock price. I want you to notice what happened during the irrational exuberant period. This is clear evidence that the market was mispricing stocks, during the period 1997, 8, and 9 before it corrected, stimulated by the recession in calendar year 2001. Stock prices have collapsed. And then notice coming out of the recession, we had this really nice strong rally in stock prices, and then after that, stock prices fell dramatically with the recession and before rising since March of this year to the level that they currently are. You could argue that the prices are slightly above earnings justified levels right now at around 20.3 times earnings. The normal PE ratio for the S&P is closer to somewhere between 15 and 18. The chart shows 17.5 is the price earnings ratio of the green line here. But I do want you to notice, based on next year's forecast for earnings, the S&P could be trading at 1226 or 1227, and from 1057 that could be very, very attractive. So it's possible we could have a short correction in the meantime, but who knows? It may never happen. It did happen, once before back here in 2002. It corrected back before we ended up having this big leg, and the point is trying to time that is virtually impossible. But I think if you stay in the market right now, things are going to be fine. And then one last thing I'd like to add, there are many stocks. This is the overall stock market. This is the average. There are many above average companies, and I've been blogging about many of them here recently, that are still significantly undervalued relative to their historical norms. So even though the market may look a little extended, there's still some real good opportunities with individual companies. Bottom line is, I think we're fine. I do think earnings are going to recover, and they could even be better than what they're showing on this graph. Hope this gave you some better insights into the market and where we currently stand. This is Chuck Carnevale saying thanks for listening, and talk to you again soon.